Well, along expected lines, ACC and Ultratech were a spectacular set of numbers. Ambuja Cements too has not disappointed on the front. Yesterday we told you about how the numbers were extremely strong and above it in our poll on all fronts. So today again, what we are understanding is that a lot of brokerages have come out with their reactions. Let's go through the numbers quickly. Revenues up almost 9% on a year-on-year basis, close to 2,800 crore mark. The EBITDA has jumped up almost 54%, and margins have jumped up almost over 600 and 650 basis points. And if you're talking about the margins coming in at close to 24%. Profitability has almost doubled on a year-on-year basis. Profits have come in at 443 crore, up 90%. Now, talking about the volumes, the key surprise factor here, volumes have jumped up almost 8% on a year-on-year basis. And the key reason for that has been the fact that this time around the company has actually seen quite a bit of a demand rebound as far as the entire space is concerned in terms of, number one, both pent-up demand post the lockdown as well as demand post the monsoon season. Now you're talking about what brokerages are saying. Goldman Sachs has come out with a note, and what Goldman Sachs is saying is that they have maintained a buy stance on Ambuja Cements. The target price they have kept is 275 rupees a share. Now what they are saying is that the earnings beat has been driven by higher revenues, almost a 7% beat on their volume estimates, as well as a 2% beat on the pricing. So volume again has been much higher, volume offtakes have been much higher than expected. Pricing trends, remember this is the calculated pricing trends, that too appears to be a beat. So despite the fact that it was locked down, construction activity was expected to have come to a standstill, and also volume offtake was almost expected to have stopped. Despite that, pricing has held up quite strong, indicating the kind of demand rebound we've seen, which indicates that it is not only a rebound from lockdown, not only a rebound from the monsoon season, but also indicating some amount of an uptick or green shoots. Now remember, a lot of the companies, including ACC as well as Ultratech, clearly have mentioned that the rural and the retail space is the one that is actually leading the demand. So what they are saying is that Goldman Sachs is saying that the view continued cost controls as evidence that the MSA or the Master Supply Agreement that Ambuja has with ACC, and this is something that they believe has begun to show results. Now what they're saying in terms of valuation is that the stock is trading at FY22 estimated 10.9 times EV to EBITDA, and this they believe is at a significant discount to its peers ACC and Ultratech. So they believe that the risk reward for Ambuja at this point of time is still quite attractive. Now when you're comparing this time's results, Ultratech, ACC and Ambuja are actually seeing the largest volume growth, 8% volume growth, of course on a lower base, and the EBITDA per ton too is extremely strong over here as well. So overall, very good